Most retail traders fail for a very specific, preventable reason. They are executing strategies they've never actually verified. They spend months staring at live charts, manually scrolling through historical data, and essentially guessing if their model holds weight, only to watch their capital evaporate in a week. But in 2026, the elite tier of new traders has abandoned the manual grind. They aren't spending hours backtesting a few dozen trades by hand. Instead, they're leveraging AI systems to build, optimize, and stress test complex models across a decade of data in under 60 seconds. No coding, no bias, just pure math. Today, I'm breaking down the exact AI, prompt framework, and workflow that allows you to validate any strategy before you ever risk a single dollar. Let's look at the data. Step 1. From strategy to quantitative logic. The secret to automated backtesting isn't a computer science degree. It's the ability to define your rules with absolute clarity. AI cannot verify a vague feeling. It requires objective logic. The 2026 Architect Framework. You don't chat with the AI. You give it a blueprint. You instruct the LLM. Act as a quantitative developer. Build a backtesting script where the entry is defined by a specific structural inefficiency on the 15-minute time frame. The target is the nearest premium liquidity pool, with a protective stop placed precisely below the swing low. Within seconds, you have a functional, error-free script ready for the market. You haven't written a single line of code. You've simply acted as the architect of your own edge. Step 2. The automated stress test. Once the script is built, we plug it into a simulation engine. In 2026, cloud-based platforms allow us to run thousands of simulated trades across years of historical data almost instantly. What we're looking for. Instead of hunting for winning screenshots, the automation engine scans every session, every news event, and every market condition from the last decade. It calculates your win rate, your maximum drawdown, and your profit factor with brutal honesty. If the data reveals the model struggles during high-impact news or specific trading windows, we don't abandon the strategy. We simply ask the AI to optimize the parameters to avoid those high-risk variables. You are refining your system in a digital sandbox, preserving your capital while you perfect the machine. Step 3. Removing the human element. Why is this the ultimate wealth pulse strategy? Because it eliminates the primary account killer, human emotion. When you backtest manually, you subconsciously cheat. You ignore the close calls. That would have hit your stop loss and focus on the winners. AI has no such bias. It provides the cold, hard reality of the statistics. Once your system has proven a mathematical edge over a sample, size of 500 or 1,000 trades, your psychology shifts. You no longer stress over a single losing trade because the long-term probability is in your favor. This is the moment you transition from a gambler to a casino owner. The new standard. The era of guessing in the markets has officially closed. The traders dominating 2026 are those who pair sound market mechanics with the precision of automated AI. If you're ready to move beyond the manual grind and start building systems that actually scale, make sure you're subscribed. This is AI Wealth Pulse, and I'll see you in the next session.